crypto has an even bigger problem where it's like, I need to know your wallet address, which is like, I can't even memorize that, right? I think if PayPal can lean into that feature of Venmo where I can type your name up, I can see that, hey, look, Andrew has like two mutual friends with me. This is the right Andrew as opposed to the other Andrew. And the back end's all just stablecoins. The front end is, this very user-friendly experience. I think PayPal can win in this new world. And so I'm really excited to see sort of PayPal leaning into this new world. And being very sort of innovative here, and yeah, I'm excited to see where things go. Welcome back to Tokenized, Stablecoin Stats, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. We are back again this month to dive into the stats behind the stablecoin market. My name is Anthony Yim, co-founder of Artemis, a crypto analytics startup. Joining me today is my colleague and friend, Andrew Van Aken, data scientist at Artemis. A quick reminder before we get into things. I need to remind you that views or opinions of our contributors today are their own and do not necessarily reflect those of the companies they are representing. Nothing we say should be taken as tax, financial, investment, or legal advice. Do your own research. And lastly, before we get into the stats, I'm thrilled to remind you that this podcast is made possible by Visa and powered by Artemis. Andrew, how's your weekend?
Well, it's great now because how does it feel to be just called a genius all the time? The industry that we work in, you're just referred to as a genius. It's great. I wake up every day. I always knew it, but I just had have to have the United States government confirm that for me. So.
Yeah, better than the other bill, stable, right? You're stable, Andrew.
Nobody wants to be stable. We all want to be geniuses. So it's been a pretty remarkable 2 weeks, actually. I really can't believe how quickly the Genius Bill moved through and finally get some clarity in the United States. And it seems like earnings season, which we'll get into a little bit more, but everybody was talking about it. Every analyst was asking every company under the sun that does anything financially related, what are you doing with stablecoins? And so this will be exciting to go forward. How are you doing, sir?
Good. I like how you worked in that little, I think, unindependent pun of clarity in there. I'm excited for more clarity too in crypto. And yeah, I mean, I was telling a friend of mine earlier, like I wish we hired even more people this year because that's just how quickly things are moving. And yeah, very bullish.
That's what politics is. It's just a bunch of puns on puns. So with that, let's talk some data, shall we? Because we have a lot to go into. Because now that Genius has passed, we thought we would start this section by doing sort of like a post-Genius state of the crypto world. What we're doing here is we're looking at stablecoin supply since Genius passed. So Genius passed on July 18th in the United States, and it's been amazing to get clarity on stablecoin situation in the United States, but the three things that Genius is trying to limit or almost ban is we see the exact opposite in the data. So yield-bearing stablecoins since Genius has exploded. Tether continues to go on a surge of stablecoin supply, and the stablecoins that are backed by things other than short-term treasuries are also exploding. And so here we're looking at a change in supply in Genius since the 18th, and Athena, USDE, adds $2.7 billion in supply, a yield-bearing stablecoin. And second on this list is Tether at $2.4 billion. Anthony Yim, this is exactly what you expected, right? All the things in Genius that were controversial are now increasing even more.
Crypto never ceases to surprise me. And I think that's the fun part of working in crypto.
Exactly. And we have to add, USDC, the US regulated stablecoin supply has lost $800 million in supply. So, well, it's only been a few weeks. It is interesting, though, that these, and Falcon Finance, too, is a yield-bearing stablecoin. And we thought we'd start by just kind of going over how do some of these yield-bearing stablecoins work and what actually do they do? And so if you look at a few yield-bearing stablecoins, including Athena, Falcon Finance, Sky, and USDX. Most of these yield-bearing stablecoins are actually what we call synthetic stablecoins. And so while it might sound very complicated, the way that these stablecoins are becoming synthetic, if you will, they don't actually hold any dollars or treasuries or anything like that. They are almost completely made up, and they have been growing very quickly. So they surged past the $10 billion supply in the beginning of July, just as Genius passed, and now are working their way toward 15 billion. So the question is, how the heck do these things work? So Athena it comes from a very simple design of that actually originated on the BitMEX exchange a while back. And what was happening there was BitMEX was not allowing people to host stablecoin. They could only hold Bitcoin. And so this is almost before stablecoins existed. And so you had to hold Bitcoin on the platform. And in order to essentially reduce your Bitcoin exposure, let's say you wanted to go on vacation, you wanted to take a day off, you would have to go short an equal amount of Bitcoin. So you would hold $50 of Bitcoin and you would short $50 of Bitcoin. So essentially, no matter what happened to the price of Bitcoin, you would always maintain this, $1, if you will. And Athena decided to take this concept and now has almost institutionalized it, if you will. So they work with many leading exchanges. And they do exactly this. They have a lot of short positions open on different exchanges, and they own a lot of spot crypto. And so the amount that's available through yield, through staking, and what they collect in what's called funding rates from being able to short things, they get a yield, and the yield is very high. So just this past month, the yield on Athena, while it started out very high at almost 25%, trended downwards, but now is over 10%. And we've seen this huge rush of people back into the stablecoin. And so Athena is now over near an all-time high of yield. And Anthony M., what do you make of this? It's almost kind of counterintuitive to how yields work, actually.
Yeah, I mean, I think it's kind of perplexing because in traditional finance, right, the more demand there is for a fixed income product of some sort, the lower the effective yield is. But in this case, it seems like as there's more sort of demand for stablecoins, the yield is going up. Uh, so, Andrew, why do you think what do you think is going on here?
Yeah, it's certainly not correlated to the broader market, macro market, if you will. A lot of times these rates are determined by how many people are using exchanges. So if the uh, exchange lacks a lot of short positions, they might pay out a higher short rate for people to incentivize to come in and short a product. And so the yield may go up there. And so there's definitely a lot of factors at play here. Um, but what do you think of this like synthetic design of a stable coin of, not holding any government yield or anything like that? Like, do you think that actually that has, this staying power going forward?
Yeah, it's interesting because I think I've been thinking about why would say like an institution want to hold something like USDE over say like a fiat backed stablecoin. I think one thing that came to mind is like it kind of depends on right to me like this yield is a very novel way it comes from a very novel source, and so as say the confidence in the US government and its ability to pay off its debt, you know, let's say that, that wanes, the global confidence of that wanes, like maybe institutions want to have exposure to a different type of sort of yield product that is less directly tied to, say, the US's government's ability to control inflation or to yeah, issue more debt. And so I think it's early. I think the US still, as you can see from 99.99% of stablecoins being, US dollar backed or US dollar denominated, the overall confidence in the US government is still quite high. But I don't think it's controversial for me to say that's like the world order in the next 10, 20, 30 years could be very different. This world is very different than the post World War II world. China's, I think there's going to be some kind of like duopoly going on. Who knows, right? And so I think that's the really interesting part to me, where I think Ethereum can be this very different source of yield for people who, yeah, want like a safe haven product.
Yeah, exactly. And we're even seeing this now getting mainstream adoption. And just recently, the Telegram native wallet introduced USDE right into the almost the homepage of the wallet. So this is actually an image of my Telegram wallet where now I can earn 20% APY by using USDE. They might be paying out incentives here, but the reality is this type of product is, not just reserved for crypto degens, if you will. It's being put into these, highly utilized channels and serving on the front page of, Telegram. And so I have to laugh once again. I live in the United States, and under Genius, I probably won't have access to Tether or yield-bearing stablecoins. And here on the homepage of Telegram, I can access both yield-bearing stablecoins and Tether. So, while Genius will take a while to go into effect, the market has clearly said, we want these types of things.
Yeah, it's almost like crypto does its own thing, regardless of the Genius bill. And I think there's kind of like this dichotomy that happens where it's like crypto, it's just like global. It's like I think we as Americans, as an American company, I thought it's like, oh, well, Genius bill passing is, all these like genius related things going to happen, but actually like crypto just does its own thing. Is that what you're seeing too?
Yeah, exactly. These trends have been going on for a long time. And so it's almost like, well, I think it'll be another leg up for the American-based stablecoins. So companies like Fiserv, companies like Jack Henry can start to investigate. Oh, how do we actually use stablecoins in a compliant manner within the United States? But if you live in a country outside of the United States and you're using Tether and you're using, Athena, you don't really care about Genius because these products are serving you very well and you're very happy with them. So it definitely opens up this new corner of the market, which we haven't quite seen yet. Companies are still obviously evaluating what to do, but the market just keeps moving on, and we continue to see stablecoin adoption.
Hmm. And for the audience members who are not familiar with Jack Henry, can you say like, a 10 seconds intro of what Jack Henry is?
Yeah, so Jack Henry provides a variety of products for almost like these community banks. And so it's pretty amazing. The company, I believe, was started in almost 50 years ago and have just continued to innovate and provide this one-stop solution for community banks from a range of AML, KYC, all sorts of innovative banking deposit products. So I could see them moving into this space and allowing community banks to access this. And it's a good segue because, why is Genius so against yield to begin with? And I thought this quote from Alchemy's CEO, Alex Shootman, really demonstrated this very well, where he said, the possibility that stablecoins could just blow up the entire community bank and credit union system. And he talks about this from a question he got from an analyst saying, yeah, stablecoins could possibly just blow up the entire system. And what he's really referring to here is he's afraid that stablecoins that offer yield would, people would just leave their savings accounts that are earning, 0.5%, 1%, 1.5%, because they can just go and get, a treasury yield. And so while this may be overblown, it is something that is coming up more and more of why companies aren't offering yield, and it's kind of like to protect these small banks. Anthony, do you have what are your thoughts on this? Do you think that the community banking system is just going to implode tomorrow?
Well, I don't think so. I think at the end of the day, there needs to be some physical presence for a bank, right? It's like, I'm not the biggest fan of like the banks I use. I mean, it's just like, it's not, Instagram or TikTok, like a fun app. But at the end of the day, right, I rely on my bank to get a mortgage, or like if I'm a small business, like get a business loan, as like a small business loan to get my business started. And I think at the end of the day, like these community banks would know their communities the best in terms of underwriting. Like, hey, let's say Bob wants to open Bob's Burgers in this small town in Nebraska. Like, right? It's like, can a purely on chain or like centralized business be able to underwrite that well? I don't think so. I think it requires like a local touch, right? And that's why you see like at the end of the day, like I think real estate investment is a very local phenomena. Like it's hard to invest in property. I live in New York. It's hard for me to invest in property in Barcelona. I don't know anything about Barcelona. And so I think there's always this like component that it's going to be very local. And I know we were big fans of the Stablecoin sandwich on the Tokenized podcast. I do believe that a lot of these community banks have an opportunity to leverage this stablecoin sandwich, and again, like offer what they're really good at, which is knowing their community members really well, and just like using stablecoins and technology to be a lot more efficient, operate a lot more efficiently.
Yeah, no, I absolutely agree. And yeah, there's definitely localized knowledge that people need within banking, and it's not just people aren't just going to leave for stable coins as many advantages they provide. The second thing we want to talk about is the number of stable coins by backing and have been increasing very much. So if you're on the go listening, the number of stable coins above $10 million in supply that were backed by fiat, so just holding, dollars, euros, et cetera, versus stable coins that were, collateralized by Ethereum, Bitcoin, used to be growing relatively at the same rate. So in the beginning of 2022, there was about 15 stable coins that were fiat backed and 15 that were crypto backed that were above 10 million in supply. Fast forward to today, and that gap has significantly widened. So we estimate there are about 50 stablecoins that are above $10 million in supply that are crypto backed versus
Oh wow,
about 30 that are fiat.
that's
And
quite
so,
surprising, right?
yes,
I feel
and
like
we
all
all,
we hear about it's like Circle and Tether and what what are in these crypto backed, like what type of crypto, what tokens are in these crypto backed stablecoins?
yeah, so a good example would be, Aave Go, which allows you to deposit different types of like, Ethereum. You can actually deposit stablecoins in, and that allows you to mint a stablecoin for yourself. And so you're kind of taking a loan out on your crypto collateral. But as we know from Genius, stablecoins can only hold a certain type of short-term treasury asset, and yet crypto-backed stablecoins have continued to grow at a rapid pace. But when you look at, the total supply of stablecoins, it still is 90% fiat dominated. So here we're looking at a chart of fiat versus crypto backing by supply. And there's over, $230 billion of stablecoins in fiat, primarily Tether and USDC. And so while people like to experiment with these different types of stablecoins, the reality is the market, wants fiat stablecoins. And so we see this, very well here. Anthony, would you ever hold a crypto backed stablecoin? What would it have to be backed by for you to hold one?
For sure, like Bitcoin, I would say. Um, Maybe Ethereum at this point, but especially with all the Ethereum deities coming online and SBET. Um, but I am a more conservative investor, and so I especially as a startup founder where I don't have that much liquidity, uh, I uh, I I try to not lose too much money. Otherwise, I may not be able to make rent, and so that's this life of a entrepreneur. What about you?
So,
What would you?
so it's safe to say we won't see an SBET backed stablecoin release from you anytime soon.
For now, no. We'll see one day.
Yeah, probably the majors. I know I think JP Morgan recently announced that they're allowed to, or they're allowing clients to take Bitcoin backed stable loans out at least. So, we could see this market widen, depending on how regulation plays out and what exactly is a loan versus a stable coin. But yeah, we'll continue to keep monitor this. And then sort of like kind of like touching on the yield point again. Treasury, it also seems like people agree with you, Anthony, in that people really just want, the safest assets to be in their stablecoin. And so here we're looking at a chart of tokenized treasuries over time from our Artemis dashboard, and you can clearly see that um, treasuries, used to be. I remember when it was $1 billion market cap in late 2023, and now it's grown over to 5 billion. And so this is while Genius says, yeah, you can only hold short-term, duration treasury bills, like the market is also saying, okay, yeah, we also want that as well. And so you can clearly see this beautiful growth of treasuries. And so I was very jealous of all the tokenized people talking about the stablecoin sandwich, and I needed a food analogy of my own. And so here we're introducing the yield cannoli. The yield cannoli works like this. You have Tether and USDC making a good amount of money, eating the best part of the cannoli on one end. They're earning a lot of money. Um, and in the middle, I'm not discounting, the exchanges because some of them do pass on the yield to consumers. And the cookie part of the cannoli is still pretty good. But if you're holding, these USDC, USDT products in exchanges or self-custodial wallets, sometimes you don't earn a yield. And so while you do get the good cookie part and you can send stablecoins everywhere in the world, you're not getting the best part, but all the way at the other end of the cannoli, you can take those and put them into Aave, Maple, et cetera, and earn a good amount of yield. And so I know our user base is just salivating over the cannolis right now. So yeah, there we go.
But also, I mean, back to the cannoli, like that's why, right? I think our friends at M0 and Agora are doing what they're doing, right? To let builders have control over how the yield is divvied up amongst different players in the space. Unlike sort of the more traditional model where Circle holds on to. Well, I guess it depends on who they're working with exactly. I think Circle passed a lot of the yield to Coinbase for the Coinbase example, but there's no like programmability into how the yield is shared amongst participants.
Yeah, so it's almost depending on your use case, you could pass the yield on in different amounts depending on different incentives, et cetera. Yeah, absolutely.
What are your reflections sort of in this like post Genius world? Are you seeing like are you seeing the after effects in the data?
Yeah, so I think our three takeaways from Genius are really the opposite of Genius. And it's great to get US clarity on Genius, but in reality, we're seeing yield bearing stablecoins explode. Their supply has gone parabolic recently. And we also see Tether, which debatable if Tether can operate in the US post Genius. They continue to lead supply increases, adding billions of dollars each week. And honestly, we're not seeing the direct effects of Genius yet. It's probably still too early for a lot of these companies. But yeah, I'm curious, Anthony, why haven't we seen that yet? Or when do you think, or who do you think will even, capitalize on this opportunity?
Hmm. Yeah, I mean, I think at the end, just technology deployment, especially like novel technology like stablecoin, just take a while to proliferate in incumbent businesses like like Jack Henry or PayPal or Visa. I mean, those are large companies with existing infrastructure already, and it's just not going to be overnight to be able to like switch your backend to be using Swift and ACH to leveraging the stablecoin sandwich and I think um, and so with that in mind, like I think PayPal actually announced some really interesting developments last week post Genius.
Yeah, so PayPal announces PayPal World, a global platform that allows interoperability of PayPal, Venmo, UPI, all of these, Mercado Pago, all these regions around the world. And it's funny because we've always been saying stablecoins are global Venmo, and here you have PayPal introducing global Venmo. Anthony, were you surprised over that this, or does this make sense, right? Global Venmo.
Yeah. Um, I didn't really see this announcement sort of circulate amongst sort of crypto Twitter, but I think it's, especially as somebody who wrote a lot of the Venmo backend code, the payments code in the ledger, uh, it is it is extremely instrumental. Actually, I think it's a whole new world because for the longest time, especially early days in Venmo, like there were just so much demand. Every time I traveled and and I told people like, oh, they asked me where I work. I was like, I worked at Venmo, and these are folks like in Spain or Italy or even Hong Kong. They're not Americans. They've never used Venmo, but they somehow heard of Venmo. And they're like, oh, I wish I have Venmo you know, in my city or in my country. And I'm like, sorry, I can't help because Venmo is built entirely on ACH. Um, but like that day is over. Like that now with this PayPal World announcement, anybody on Venmo can pay anybody else on the entire like PayPal network. And so I think like it's really cool to see PayPal leaning into its strength of having built this two-sided network, essentially consumers and merchants, and actually like leveraging the beauty of crypto and stablecoins, which is borderless finance, or as Patrick Collison likes to say it, and actually like turn that into a product. And so I'm really excited to see where this goes, given especially like the sort of brand reach of Venmo.
Yeah, and we actually see this, a lot of trends in the data to indicate that this is a really great idea of PayPal to move forward. The first is weekly card volumes on crypto rails has been growing at an astonishing rate. It was about zero in June of 2023, and now it is, weekly volumes are about, of close to $11 million between a handful of providers. So there's definitely this demand of now people getting stable coins, what do you do with them? And like you've said before, the card factor is like this perfect way to off ramp crypto. And so we've just seen this explosion of crypto volumes. And also PayPal was, probably looking at the data themselves and saying, hey, a lot of people are starting to use this for P2P transfers. So here we're looking at a chart of PYUSD, what we call P2P transfers or blockchain address to address transfers. And it had hit a new monthly high in July, about $3 billion between Solana and Ethereum. PayPal has also recently expanded to Arbitrum and Stellar. And so you both, low cost chains, Stellar, which is really prioritizing these P2P payments. And so, clearly all indications and data suggest that PayPal is going towards this, global Venmo system. And I think they're really leaning into their strengths here. And when you look at PYUSD across on-chain activity, and here we're looking at PYUSD, how it's divided in between DeFi, centralized exchanges, and bridges. And when PYUSD first came out and it first crossed over the $1 billion mark, there was this huge DeFi surge, this green in the middle, which since came down through incentives. But now you can see this purple here of huge volumes of PYUSD moving onto centralized exchanges. And so another indication that PayPal is doing really leaning to their strengths of working with these payment processing companies, exchanges, et cetera, to really provide liquidity and the ability to transfer PYUSD. Does
Mhm.
this surprise you at all, Anthony?
No, I mean I think it's like at the end of the day, it makes a ton of sense that they would leverage sort of the centralized exchanges because actually by using centralized exchanges and a hybrid solution where they also use an internal ledger, right, to settle between, say your Venmo paying somebody at PayPal, it's all within the same system. You can actually probably outperform the performance of just a pure blockchain solution, because I think people forget that an internal update to a SQL database, right, for paying, debiting one user and then crediting another user, that's even cheaper than using stablecoins. It's the electricity cost to update a row in a SQL database and an AWS server, which is, yeah, like orders of magnitude less than um than the fees that you pay, it costs to execute a transaction on a blockchain. And so again, I think to our point earlier, where it's like PayPal is now really leaning into their strengths. I think that's a hybrid solution where it's they use their own centralized ledger, they use some their own or partner with a SEX and to facilitate these transactions is the way to go. Um, and I think one more thought popped up in my head as you were talking about PayPal that I think again is very underappreciated is that the reason why people use Venmo, especially early on, is that you don't have to know the other person's email address or phone number. You actually just look them up by their name. And it's a pain in the butt to even remember. I don't know what your Gmail is, Andrew. I don't know, right? But I know your name. And so crypto has an even bigger problem where it's like I need to know your wallet address, which is like I can't even memorize that, right? I can memorize your email. And so I think if PayPal can lean into that feature of Venmo where I can type your name up, I can see that, hey, look, Andrew has like two mutual friends with me. This is the right Andrew as opposed to the other Andrew. So and then just to use the back end, and the back end's all just stablecoins. The front end is, this very user friendly experience. I think PayPal can win in this new world. And so I think like I'm really excited to see sort of PayPal leaning into this new world. And being very sort of innovative here, and yeah, I'm excited to see where things go.
Yeah, and the growth clearly looks up. They, started, they're a little bit of a latecomer, but now they're one of a handful of companies to now have over $1 billion in circulating supply. So, congrats to PayPal. Finally, on our we have a new segment, the lightning round stats, and this is from Andrew spending way too much time pouring through company earnings, looking at slides. And so this past earnings season, there were over 40 companies in the United States that mentioned stablecoins. Visa disclosed that since 2020, they have processed $25 billion plus in card-linked stablecoin volume. WisdomTree's assets under management, I believe they doubled to about $250 million. Coinbase makes a lot of money from stablecoin income. And Cubix, the customer bank platform, but it's almost a replacement to Sen and Signet. They claim that they processed over $1.5 trillion in volume, mostly coming from the digital asset company in 2024. And so pretty fascinating to see that Cubix really just replaced Sen and Signet and is really going all in there. And what I thought a very interesting slide, coming back to PayPal one more time, is on this slide from their investor day, PayPal lists the three strategic growth drivers for the company. First, of course, is AI, which everyone's talking about. Then comes advertising, but third is crypto and stablecoins. So, stablecoins have really become almost equal footing with AI for a lot of these financial companies. And I think we kind of alluded to this earlier, but post Genius, we're still in this almost like talking about it phase where here's what we're looking at is the number of times that stablecoins were mentioned on Q2 earnings calls of different companies. And so actually Visa took the lead with they mentioned stablecoins 31 times.
Oh wow.
More than Coinbase, more than PayPal, more than MasterCard. And so they're clearly trying to be the leader here. And every company gets asked about this by investment analysts. What is your stablecoins strategy almost? And so some companies had better responses than others, but you can clearly see by this chart, who's really leaning into stablecoins.
You're almost giving away the sales pipeline that stablecoin companies should be should be going after. I feel like we should get paid for the slide.
Exactly. If you're if you're a Circle, if you're issuing your own stablecoin, here's the companies to go to because they are eating it up. And so lastly, I thought I'd just highlight one more slide here. This is the the Cubics platform that we talked about earlier, Customers Bank. They, for the first time, disclosed their payment volumes via Cubics, and they say that they're doing about $1.5 trillion annualized per year. And this is a 24/7 network similar to Send and Signet to move cash from stablecoins to cash. It's run both through an API. This was the first time I saw this, and I circulated it to a few people deep in the stablecoin industry, and this was actually the first time they saw this too. So we want to tip our hat to our we don't know any friends at Customer Bank, but hopefully we'll get to know them someday because they're really doing something interesting here.
Thanks, Andrew. I think that is all the time we have for today. So thank you again so much for listening and watching. Andrew, where can people find out more about you?
Well, they can follow us at Artemis. We post a lot of interesting stablecoin insights there and try to push good content out to our readers. We have our monthly stablecoin report coming out soon, and so we'll be sure to put it there first.
Yeah, and you can find me at Anthony Yim on X or LinkedIn. And if you haven't already, please subscribe to the Tokenized podcast on Apple, Spotify, or whatever podcast platform you prefer. Finally, if you enjoyed this and you want more, leave us a review. It really helps others find out about the show.
Stay stable, everyone.